Everyone, this is Ankit. Welcome to tonight's conversation, tonight's episode. I'm a co-founder of Wealth Hub, and my background is I graduated from BITS Pilani as an engineer, and after that I started working as an investment banker with Swiss Bank in New York. And after managing my money, saving my money, and investing it properly, becoming financially free, I decided to come back to India to start. Wealth Hub. Today we have a very interesting guest with us, Soumya from Tap Invest. She's a co-founder and co-founder of Tap Invest, and I'll let her introduce herself. So Soumya.
Yes, thanks a lot, Ankit, for hosting me today. And good to have everybody who has joined us today. Thanks for taking time out, I think, on a Wednesday evening at this hour. So, quick background about me. I graduated from Ahmedabad in 2020, post which I have been working as a management consultant with McKinsey, primarily with their financial services clients, so mostly banks and NBFCs, the large ones in India. And I also worked briefly with city markets in their fixed income domain. That's where the whole interest came into being, and eventually figured that fintech or finance is my area of interest, and hence wanted to start something of my own with my co-founder Nishchay, who also happens to be my batchmate from IMA. So yeah, that's how we started Tap, and there's obviously more to the story behind how it started, and probably we'll get into it during the discussion. And happy to be here, Ankit, and excited for our discussion today.
Thanks a lot for your time, and thanks everyone for joining in. Soumya, I'm a little curious. So you when you were working with Citi, how did the idea of Tap Invest came into being?
So, actually, when we started working, right, it was lockdown. So all of us were working remotely. That's how we started our career. And fortunately or unfortunately, we had too much time at hand to really wonder and ponder what we were doing really. And is it something that we really wanted to continue doing for a long term? And in that ideation or thought process, we started exploring multiple ideas. We were actually, fortunately, at that time managing our own money and that of our friends and family, and that was something as a passion we like to do on the side. Both Nishra and I had a common interest there. We used to keep sharing stock tips and interesting investment opportunities, and even with our batchmates, otherwise also. And we were heavily exposed to equities, which was a very exciting product at that time because markets were just recovering after COVID and everybody was getting unreasonably high returns. But then when the correction started happening, we realized that we've not done a very good job of diversification of the portfolio. And hence we started looking for some fixed income options with good returns. But didn't find too many good options in India back then. So we started looking at some of the options which existed in the Western markets, especially in the leasing space or invoice discounting, even P2P for that matter. And then when we started discussing these options with some of our immediate network, we figured that a lot of people had the need for this product and they were in general very curious to know more. So that's when we started signing up on a few of the platforms which existed back then, started sharing referrals with our friends and saw a very good pickup. And then we thought there's something exciting happening here. We dug deeper, looked at the market, understood the size, also started speaking with few of our investor friends, VC investor friends, just to understand their perspective of how VC market is looking at this space. And when we got initial validation and support from the entire ecosystem, we thought it's a good time. There's very less to lose, so let's take a plunge and see where it goes. And that's how this started.
It's very interesting and very organic as well. I mean, working something similar and just identifying that gap. And I think that is how most founders also think about, identifying that gap and trying to solve their own problem many a times.
Yeah,
And then seeing, how big is the problem. Very similar story for us as well, Wealth Hub as well.
yeah.
That's for at the time. Cool. So, Samya, jumping right in, we're talking about invoice discounting today. So, I would like you to, just to share in very basic terms, what is invoice discounting?
Got it. Let me take an example to explain this so that it's more relatable. So, there are a lot of large companies. Let's say, let's take an example of ITC. Now, ITC manufactures a whole plethora of FMCG products, and so therefore they will require, different types of raw materials coming in from different types of vendors, be it, let's say, their wheat that they're sourcing, or let's say some flour they're sourcing for manufacturing biscuits or whatever. Now, and there are thousands of these vendors that they're working with, right? ITC will have, let's say, a payment cycle of anywhere between 30 to 60 days. By the way, recently there was a regulation which makes now the SME payment cycle to 45 days, very recent. So people are still transitioning to that. So let's say there's a 45-day payment cycle. The vendors will only get money, let's say, after 45 days, but they require funds today. So that's where platforms like us come into picture. So these vendors can come to us, show us that invoice that they have raised on ITC, and we can sort of list that as an investment opportunity on the platform. And retail investors, essentially people like you and I, can go and subscribe to, let's say, if it's a 1 crore invoice, and if we want to invest 1 lakh, we can subscribe to 1 lakh part of that receivable. And at the end of 45 days, when ITC makes the payment to the vendor, that vendor can make the repayment to us. And in this process, the investors get to earn anywhere between 13 to 15% sort of an IRR. And the tenure is usually depending on the invoice tenure, but typically between 1 month to 3 months. So this is how the invoice discounting product works. Traditionally, it's been heavily financed by banks and NBFCs. What we are trying to do is make it accessible for retail investors as well, so that it can open up for as an opportunity for people like us to also explore this and earn a good decent return in a very short span.
Got it. And when we're making such an investment as a a retail investor, what kind of risk is associated? Is
Got
it
it.
okay? So the invoice when it is coming to us, is there any chances of like discrepancy or issues that ITC in this case, the example that you gave, key, okay, we won't honor this.
Hmm.
Something is not right, or any other kind of risk that is there.
Hmm. Got it. Yeah, I mean, there are risks inherent in the investment opportunity, just like there are risks with any investment opportunity, right? Unless you are dealing with something like a very secured government bond or an FD, there are risks with any investment product. So there are risks in this product as well. One is the one that you mentioned, which is something like an operational risk, where, let's say, if there is any dispute between the two, then does ITC honor the repayments or not? So to mitigate that risk, what we do is, even before listing the invoice, we do get a clarification or verification or confirmation from ITC over email saying that this invoice is completely free of any contention or dispute, and hence we will be making the repayment in, let's say, whatever 45 days or whatever the timeline is. So that reduces this risk. Another risk which exists is the credit risk, because end of the day you are buying into the credibility of the company, which is the vendor in this case, let's say. So that's another risk which, as an investor, you're taking. And we obviously have our internal team which does that risk assessment. And then there's a whole process of approval from the risk committee before we onboard any company for that matter. And even after the first time evaluation, on a monthly basis, we do risk monitoring onto that company, similar to how the processes work at any bank or NBFC. So we do the monthly monitoring where we look at their financial performance, their operational metrics, and any significant change in their shareholding pattern, etc. So that's how we are sort of ensuring that we know the risks that exist in a company before we onboard it. In terms of risk mitigation measures for the credit risk, we have instruments like security post-dated checks or undated checks, which can be encashed in case there is a delay beyond a certain point in terms of repayment. We also have ENASH mandates agreed by the client, so we can trigger them, and that essentially gets taken under Section 25 of the PSS Act. Um, Apart from that, in some cases, not in 100% cases, but in some cases, we do have an escrow mechanism set up where the payment directly comes from ITC into that escrow first. We get our settlement, and then post that the money gets settled to the vendor. So these are some of the security mitigation mechanisms that we've set up so that the credit risk for investors are also secured.
Great, because when you were mentioning we pay the vendor, and then when ITC is making payment to the vendor, that money comes to vendor's account and not to us, not to the
Hmm.
investor. I was going to ask you, okay, so what if that after receiving the payment from ITC, vendor just
Huh.
says, okay, I'm not making the payment? That essentially
Yeah.
the credit risk over there.
Yeah, yeah,
So
yeah. No, so that risk is there in some cases where the payment doesn't come directly from the customer to us. But yeah, we do proper thorough credit checks to ensure that the creditworthiness of the vendor itself is very strong.
and you mentioned that the typical tenure is roughly 1 to 3 months, is
Yes.
what you mentioned. So, apart from invoice discounting, are there any fixed income instruments that have kind of similar tenures?
There are a few. For example, there is something like a liquid fund which exists. I wouldn't call it very close to a fixed income product, but if somebody has to draw like loose parallels, I think they can consider that. Then there are certain um, instruments like commercial papers, which are their CPs in short that we call. Those are usually short term in nature. Most of the bonds, I would say, are typically longer than 3 months. Even in the best case scenario, you'll find something which is like a 6 month or a 9 month. Then there are a few PTCs, which are pass through certificates. These are again not standard instruments, but instruments which platforms like us curate on an opportunity basis. Here again, this is like a 6 month product where you can make similar sort of returns, usually lower than what you can make in ID, something like a 10 to 12% is what you can make in these products. But largely, what we feel is fixed income as a category in India is heavily underpenetrated. The largest product in the segment which gets sold is like an FD, and nowadays we have Flexi FD as well. So that's another close alternative, I would say. But a lot of work
Sorry,
is
what did you say? What's the another FD that you said?
Flexi FD, where you have slightly
CFD, yeah.
shorter tenures. But a lot of, I would say, work is still needed to be done in this space, and hopefully, folks like you and I would be able to do that for Indian retail investors.
No, no, absolutely, because we have been talking to a few other founders of platforms which are offering fixed income products, and
Yeah,
if you compare it to other markets like the more developed market, US, UK, Singapore, and stuff, the penetration or the size of the market, for retail investors in fixed income is tiny in India. Like if you compare to other markets, so plenty of scope there. So
absolutely.
great. And so Soumya, when you were mentioning about these other products, with kind of similar rating, liquid funds, of course, I understand, but other CPs and PTCs and stuff that you were mentioning about, what is the kind of return that these instruments offer?
Usually, these will be ranging anywhere between, let's say, 8 to 9% going up to 11, 12%, depending on the riskiness of the product itself. That's also
Okay.
pretty decent compared to what people make in FDs normally. But obviously, it's not as good as what you can make in equities or mutual funds. But if somebody wants to diversify their portfolio specifically with fixed income options, I think these are pretty good options with decent returns.
Okay. And the invoice discounting offering instrument or investment that comes on, say, Tap Invest, what is are they rated? Are they credit rated?
No, there's no rating as such available on these deals because these are not, like your typical bond or similar type of instruments. These are mostly contractual obligations on the companies against which they have to make some payments, and therefore investors get to earn some returns. So here we offer anywhere between 13% to 15% kind of IRR.
And are the vendors generally credit rated, or I mean,
Um,
issuer rating do they have?
Usually the customers are rated. So let's say if the invoice is raised on an ITC or similar such companies, these will be rated. But mostly the vendors happen to be smaller entities. These are SMEs with a turnover of anywhere between 50 crores to let's say 500 crores or more in some cases. So very few of them will be rated. For example, recently we onboarded Gensol as our client, so that is rated. But then there are very few like this. Most of them happen to be SMEs which are not rated.
And in India, what is the size of invoice discounting, and particularly on the retail investor side, if there is any, or you can say the total size?
So the overall market size in India currently is about for invoice discounting is about $60 billion. But then again, this is mostly fueled by banks and BFCs and the traditional sort of financiers. If you talk about retail penetration, there is no the absolute number, but if we have to make a guesstimate depending on what platforms like us are doing, I would say it's about 20,000 crore worth of a market annually, which is also pretty decent in today's date. But again, compared to the total market size, you can imagine it's just a fraction of that.
20,000 is like what, roughly 5%, give or take,
Yeah,
like less than
yeah,
5%, less than
yeah.
5%. Okay. And Samya, when we are talking about retail investors investing in invoice discounting, uh, who should invest in invoice discounting from retail investor perspective? What kind of
Okay, got
profile?
it. So are you asking from a risk level perspective?
Yeah. Yeah.
Okay. See,
Or any other, like, given your experience as well, on your platform, what are the kind of investors that you're seeing that have been
got it.
investing in?
So maybe I can tell you what type of TG that we've typically seen showing interest in this product and for whom it has worked. These are usually, people with in a slightly higher income bucket. I would say these are, upper middle or HNI type of users having an annual income of above 15 lakhs per annum, mostly. That could also be by design because our minimum ticket sizes are, 50,000 and not less than
Okay.
that. So it could be by design as well. And these happen to be interestingly men mostly. And even if we see female investors, these are proxies for their either male counterparts or their sons or fathers or whatever. So that's the typical geography in terms of their demographics. They're located mostly in tier one metro cities, because again the investment process is relatively tech is meant for tech savvy users, which happen to come from these sort of cities, well educated, mostly having a background in finance or have been a regular investor for the last 3 to 5 years in equities and other asset classes. It is, I would say, for somebody who is starting out fresh in the fixed income category beyond FDs, I would say it's a relatively mid risk type of a product. So somebody who has the risk appetite of investing in a product which can give you relatively higher fixed returns, and you can sort of park that money for 1 to 3 months. These people should be exploring it. There are a few interesting use cases that we've seen people use this product for. One is we've seen when somebody makes a windfall gain. Let's say you've sold a real estate property and you have surplus cash flow lying around and you don't know what to do with it for a few months at least. Then people park it. Another interesting use case is whenever markets are not doing so well, then people take out the money and then put it here in the meantime until market recovers, and then they sort of get back in that. Apart from that, we've also seen a behavior where people stay invested for a long time. So let's say, although the duration of the product itself is not more than 3 months, but every time they get a return, they sort of reinvest it and maintain a relatively 1 year, 1.5 year long type of a portfolio. So these are some of the interesting use cases that we've seen. But yeah, somebody with a mid risk appetite is what who this product is meant for.
So very quickly, if I have invested whatever X amount of money, I need to hold it for the period, the tenure, right? I can't sell
Yeah,
it before
there is
that.
no liquidity option before the date.
Okay, okay. All right. Good to know. So when it comes to invoice discounting, say on tap invest, how are the deals selected?
So there is a so we definitely have some interesting sectors. So we have a thesis where we've identified some interesting sectors, and this obviously keeps updating basis how the macro economic conditions are performing. So some of the go-to sectors for us are in the logistics warehousing space or infra space. Lately, we've also started doing a little bit of I would say D2C FMCG, that consumer space, so to speak. But mostly these happen to be B2B dominant industries because of the nature of the product itself. So yeah, mostly on those fronts. And so basis that industry focus that we have, we try to identify, and then second filter is obviously the SME nature of the companies also. So anybody between, let's say, a 15 to 20 crore turnover going up to 100, 200, 300 crore turnover is something that we sort of shortlist. And then there are different ways in which we are able to attract these companies, post which they go through a whole process of risk evaluation, which we already talked about. And once they clear all these stages is when we sort of list them on the platform.
And so when you mention sectors, this is from the supplier side, the vendor side, or the companies that they're supplying to?
This is the vendor sectors. Yeah.
Okay, okay, all right. Okay. Okay, so if I come to your platform, okay, and I'm an investor, I want to evaluate. So how can I evaluate if an opportunity, investing invoice discounting opportunity is good? I mean, any rule of thumbs that you have?
So I think first evaluation or shortlisting happens largely on the basis of the terms of the deal. So we have seen people preferring something which is relatively short tenure and gives relatively high return. So most of the investment goes into a typical deal structure. If I have to talk about something which is like a 45 to 60 day, giving you 14 plus sort of an IRR gets shortlisted upfront. And then once you have your shortlisted, let's say 2 3 companies ready, after that people can look at their financial performance. So on the platform we tend to give all this information available, make it available to the users, where they can look at their financial performance, their operational performance, background of the founders, what sort of investors are backing them, and details on these fronts. And then for each deal we also have a section where we mention why, what are the top 5 reasons why Tap Invest is keen on bringing this opportunity to you. So these are some of the information or pointers that people can consider before making their decision.
Okay.
And
So,
another
but
important sorry, one important factor that I missed to mention is since we do regular raises for companies which we have strong, we have seen their strong performance month on month in our risk monitoring process. We also show metrics like how many deals has this company raised and successfully repaid. So people can also see the repayment behavior with us, and basis that also helps them make the decision.
okay, but I think particularly for someone who's doing this investment for the first time, that can be
That
a good thing. Okay, this company has already come here on this platform, make the payment, and
correct.
everything has functioned. And
Correct.
given the shorter, relatively shorter tenure, it's also easier to see that those cycles have been completed,
Yeah, yeah, yeah,
right?
absolutely.
Interesting. All right, cool. Okay. Okay. This entire offering, invoice discounting, is it regulated or?
So currently, there are no set guidelines or regulations for this product per se for retail investors in India. There is obviously Factoring Act and PSS Act, etc., but they don't directly apply to this sort of arrangement for retail investors. So we yet to see something come up in this space. But what we have done is one, we sort of try to have a direct line of communication with regulators just to keep a tab on what's coming up, what's happening, and even share our suggestions on what can potentially come.
Mhm.
And secondly, we also have taken some preemptive actions in terms of setting up escrow mechanisms or ensuring that there is a trustee appointed who is doing the regular audits, etc. Just so that if just to be on the right side of regulation if and when it comes.
Makes sense. I mean, sooner or later, that will come. So it's
Yeah,
always better to be kind
yes,
of prepared as much as you can. So,
right.
okay. Now, see, how do the economic downturns or booms affect invoice discounting market?
We can look at it from both angles, the investor lens and the company's lens who are raising. From an investor lens, it's usually as I was mentioning, right? Usually a factor of how markets are performing. So if markets are doing relatively well, we see that people tend to reduce their exposure towards this product, which is giving them max 14 15% returns. If people are able to generate better returns out in the market, they usually go for that, which happens not very frequently, but we've seen a few instances when it has happened. Similarly, the vice versa also happens. So, around the time of elections when markets were turbulent, people were actually parking more money here because for the short term markets had fallen. So we keep seeing that trend from on the investor lens. If we talk about the company's lens, again, this varies from industry to industry. So the industries which are, for example, right now there is festive season going on, right? So a lot of D2C or consumer companies are actually doing pretty well in terms of sales. So a lot of them need working capital to stock up on their inventory or make those production lines faster. So the demand usually increases around this time for these set of industries. And when let's say it's relatively slower, the market is relatively slower, then they don't need so much working capital and the demand reduces. So we do keep seeing it on and off depending on which industry is getting impacted by the macro factors, and accordingly, it keeps changing. So we have a good mix of companies coming from different industries, so that overall for investors, there's no impact in terms of available investment options on the platform at any given point in time.
So then, say you said there are multiple industries, companies from various industries that are on your platform. So are there any specific sectors, industries that tend to be more resilient and few that are more risky?
So the resilient ones would be mostly industries in the essential services space, let's say. So broadly saying something like pharma or like an agri. These are the industries which relatively are unimpacted. But again, something like a textile or something like an automobile is usually more affected by some of the ups and downs in the markets that are happening. So depending on that, and we try to keep a good mix. So depending on um, it's always important to have some companies which are resilient at all times, but at the same
Yes.
time it's good to have companies which can do really well when the markets are up, and then they usually don't do as well when the markets are down, so we have a good mix of both.
So this would impact the number of deals that are coming on the platform and not necessarily the payments, right?
Yeah. This will impact only the number of deals or the amount of requirement each company has. But now the payments to definitely have to happen on time, and we make a very strong. We ensure this very strongly that the payments don't get impacted. Obviously, it sometimes it does happen that because of certain operational issues, bank whatever downtime, etc. There are a few delays here and there that happen, but yeah, otherwise the payments are meant intact.
Okay. And with the interest rate change that uh, is coming, right? I mean, sooner or later, it's kind of coming. How do you
We've all
think
been
the
anticipating.
so when that how do you think it will impact the kind of return that people are making on invoice discounting?
So usually, the way it works is, and similar to how banks and BFC also operate, is everything is linked to the repo rate end of the day, right? So if the repo rate increases, normally the cost of borrowing also increases for any business, and that's how we also translate it for in terms of cost of borrowing for our clients as well. And investors do get a benefit of that because end of the day, that's the reason why a platform like ours exists, right? Otherwise anybody can go to a bank and sort of deposit money and earn a relatively predictable rate of return. But the
Mhm.
reason why we exist is because we want to plug this gap between what a bank is, the rate at which a bank is lending versus the rate at which they are providing returns to the investors. So we do pass on that advantage to the investors as well. So it's more or less in line with the repo rate.
And is it one on one? One is to one? Like if there is a drop, let's say by 50 bits, 0.5%, uh, the impact here will be 0.5%, or there's some
Not
factor.
really, because there is also a play of negotiation, and obviously the actual world cannot be as simple as that. So it's not a one is to one ratio. There is definitely negotiation that happens, and it is in line. I mean, if it's increasing, it increases. If it's reducing, it reduces. But it might not be an exact factor.
So, I mean, directionally, is it the impact is more or lesser? I mean, if there has been a
Yeah.
trend.
It is lesser empirically because again these companies also have other options available as well, right? And again it also depends on the size of the company. So for example, if it's a large client for us, we would also not want to disturb the arrangement too much, so we are able to offer them, let's say, something which is not very doesn't impact too much their cost. But if it's a relatively new company or a smaller client, then we are able to have better negotiation power there.
Makes sense. Makes sense. Okay, and generally speaking, so actually, I'm jumping back. So, in the market in India is roughly 20 billion, is what you said. How does it compare to other markets like the developed markets?
I said it's 60 billion in India.
Oh, sorry,
And
60 billion.
yeah, so if you look at the global market size is about $2.5 trillion. I'm not particularly sure about the exact numbers of specific economies, but the global market is roughly about 2.5 3 trillion dollars, out of which in India it's about $60 billion odd. So the
So,
market in India is
plenty,
not, huh. I mean, the
plenty of
overall
scope.
market, yeah, there's plenty of scope. And even today, the market is not like it's sizable in India if you see, but there's obviously a lot of scope for penetration further.
And do you think that a reason for people not being able to so accessibility was one which platform like Tap Invest is trying to solve for, and I think because it's a kind of a relatively newer product, financial literacy, I mean literacy around this will also be a major driver, right?
Correct. Yeah. So we do a lot of initiatives around educating more users about what's happening here, a lot of social media campaigns, and then we also tie up with wealth managers, IFAs, and the typical wealth advisors that most of the retail investors tend to rely on for these kind of decisions.
Mm.
And through them, we are trying to do a lot of activities around this. But again, just like how we saw with mutual funds, right? It really took off when Amphi started doing those campaigns around mutual fund
Yeah.
sahi hai, and those sort of comforting campaigns, so to say, for retail investors. Something significant, if it were to explode, has to be driven at the end of regulators or the government. But all of us players do keep trying our best to ensure that there's more and more awareness about these products in the market.
Okay. It's 8:30. Mita, if there are any changes, sorry, if there are any questions, do let us know. Do stop us. All right. So moving on, Samya, quickly, like any advice to retail investors, particularly first-time retail investors in invoice discounting?
See, if, for all the first-time investors, in fact, on the platform also to induce trials for the first investment, we've reduced the ticket size to 10,000 rupees, because we also understand that committing like a 50,000 for a relatively new product for somebody
Mhm.
who's starting it for the first time could be tough. I would urge that if you're new to it and you have enough risk appetite, if you're in the mid risk sort of category, definitely try it out. Try out with a smaller portfolio size, see how it works, see, look at the repayment behavior for initial 2 3 months, 4 months, and gradually as you start gaining confidence, then you should start increasing your exposure. It's always good to find people who have done these investments already and get their understand from them their first hand experience, get feedback from them. Also, there are RMs, I think, available almost on our platform. So whoever your RM is, eat their brains out for the first investment, understand really in detail what everything means. Because end of the day, it's your money, right? So no matter what anybody is saying, you have to take the responsibility for it. So people should do their homework, but at the same time, do try it out. I think it's a good opportunity, and the reason why we launched it is because we wanted it for us, right? And it's working well for our portfolio personally as well. So it's a good investment product, but it's good to have the understanding.
Okay. So, say I'm kind of new to invoice discounting, or maybe complete beginner. What portion of the debt allocation that I have, can go towards invoice discounting,
So
or how should I be
see,
looking at
got it. So I would say anything between to start with, something up to a 5%, 10% should be good. And then once you experience it, once you have confidence in it, you can gradually start increasing. It is also a factor of what is your risk appetite. So if you're slightly on the higher risk appetite front, you can definitely increase it also. But anything up to 20-25% exposure, I think, is pretty healthy exposure to have for this product of your debt portfolio.
So you mentioned 20 to 25%.
Yeah. There
That's
are people
interesting.
who have, on our platform itself, I know there are people who have a very significantly high exposure towards this product. People holding, 5 crore plus portfolio in this product itself. I'm not aware of their exact overall portfolio size. I'm assuming it's sizable. But even if it is sizable, I think 5 crore exposure to this product is still very, very strong. So there are people who do that as well. Again, because they are high risk appetite. So depending on your risk appetite, I mean, people should take a call, but something like a 5%, up to 5% to start with, and then gradually increasing it to 25% should not be very risky.
Okay. Thanks for sharing that. So that people have some idea, how to just broadly think about it. All right. And now, so Soumya, how does Tap Invest, or what sets Tap Invest apart from other platforms, that are offering invoice discounting?
Yeah, I think that's my favorite question. And very oftenly asked as well, right? Not just by retail investors, but also by our equity investors all the time. So, what we take pride in with Tap Invest is the kind of user experience that we offer to the retail investors. And the reason why we specifically focus on this is because if you are doing a B2B business, or you're working with people who are, investing very large amounts, it really doesn't matter. But for somebody like a retail investor, even a small thing like like a user experience, like how does the click of a button feel, right, makes a lot of impact in terms of building trust, and really understanding to what level of depth somebody has gone in understanding their pains and really empathizing and solving for it. So that's something which we keep at the core of what we build, and everything that we build, even if it is costly, we go through multiple levels of iteration until and
Hmm.
unless we're satisfied with the feedback that we're getting from the users. So that is definitely one thing. Apart from that, we've tried to build a very good support system in terms of providing RM at the touch of a button. They are available on WhatsApp, on call. Literally, as soon as you sign up, you don't even need to invest to be eligible to get an RM. As soon as you sign up, you have an RM assigned, and they're very they're able to help you in whichever language you understand. And when I say language, like I don't mean like the literal term language, but let's say if you're a seasoned investor, they're able to explain you in those terms. If you're somebody who's just starting fresh, they'll dumb things down and make it very simple for you. So that is another level of comfort that we've tried to build. And then last is the product itself, right? So the kind of deals that you'll find, or the kind of companies that you'll find, is something which is unique to us. Obviously there'll be some overlap across platforms, but then these are companies, most of the companies are something that you'll only find with tabs. So those are some of the common differentiation. But yeah, I would say I just tell people that they should try out everything and then try to find the differentiation for themselves.
Okay. Okay, good to know. So, personal experience, like many times, the services part of the financial services is missing in this country.
Yeah.
So it's very refreshing to hear that you guys are focusing so much on the service and the experience for your users and clients. That's
Yeah, for
very
sure.
nice to hear. Great. So, Soumya, how do you see the future of invoice discounting in India? Any trends that you have identified in the
So there are a bunch of things that are happening. I would maybe look at trends in three lens. One is immediate term, then midterm, and then long term. In the immediate term, what we see happening is, one, obviously there are a lot of players which are coming up because the space is heating up, and a lot of interest from retail investors as well. So we're seeing a burst of new players, new entrants coming in, and the market expanding in general. We are also seeing that more and more companies are becoming accustomed to this alternate form of financing. So there's increasing penetration from the other side, which is the client side as well, that is happening. In the and obviously increasing penetration of digital or tech to play in terms of making this more accessible and user friendly for retail investors. These are some of the immediate term effects that we see. In terms of midterm, what we feel is that something like, let's say, a relatively more set guidelines of how the platforms should perform, and what should be the focus area, how should they build, from the regulators that might come. We also expect that more and more companies, it'll become easier to evaluate more and more companies because of various initiatives by the government, such as making e-invoicing mandatory for companies with more than 5 crore turnover. So these sort of overall, I would say, at an infrastructure level, there are a lot of developments that are happening. Then we have account aggregation, which is now playing out. So a lot of infrastructural developments which will help us evaluate the companies, the real credit worthy companies better. That will start emerging, become it'll become much more seamless in the midterm. In the long term, we will have, I would say, technologies like blockchain becoming very prominently used for tracking the entire supply chain. The questions that you were asking in the beginning, right? How do we know there's no dispute? Something like a process will probably help us understand that even better. But again, it's a very long term, I would say. Not even Can't even imagine when that will happen right now. But if these technologies emerge, then the whole process will become even more streamlined to that extent. And obviously, the penetration levels that currently stand at less than 5%, that will increase. The education levels will increase among the users. And yeah, and there'll probably be a very strong regulated structure around this product, which will make it more appealing to masses, which are the FD investors, let's say, of today. They might start latching onto this product.
So very exciting times ahead.
Yeah, yeah, yeah.
Great. Shito, last question from my side. What's next for Tap Invest?
Uh, See, For us, at the core lies our users. So day in and day out, we're doing nothing but just solving the pains and the feedback that our users are sharing with us. There is focus on, so invoice discounting is just one of the products that we offer, right? So we also do bonds. So we have unlisted bonds available. These are corporate bonds, NBFC bonds, which we have identified as another interesting fixed income product, which retail users are excited about. So that is there. We are also building out the sell side for bonds, which is something which is non-existent in India today. And one of the major inhibitors preventing retail investors to try out bonds as a product, because most of them have a lock-in period of whatever, 12 months, 15 months, 18 months, and so on. So we're trying to build a platform where anybody can sell a bond that they bought anywhere on Tap Invest. That is, yeah, that's going to be pretty exciting. Apart from that, we are also coming up with more products in the fixed income category, because we want to become a single stop shop solution for anybody who's trying to build their fixed income portfolio. In fact, our tagline says Tap Invest is home to your fixed investments, right? So in that spirit, we're trying to launch more products. So something like, let's say, FD or gold is something that we are also trying to explore and bring onto the platform. And while we do that, we are trying to solve pain points that users have, making the journeys even more seamless, in enabling one-click investments, and just improving the whole experience of investing via Tap Invest.
Great, great. I think personally, I would love the secondary market for bonds. What you mentioned that you
Yeah,
guys are working on,
yeah,
because again, many times when you are investing in a bond, something that is a longer tenure. Okay, I don't need this money, but just psychologically, right? If I need it, do I have an option of taking it out? So that just having
right,
that comfort, okay, there is an option, that just gets some comfort. And of course, as far as the volume is concerned, it will grow slowly. I mean, even if we look at equities market, the volume that we see today, it has taken decades to reach where we are today, right?
correct,
So that will happen, but having that platform, that option there, so that that number can start from somewhere and eventually grow and get to something. Great, thank you so much, Soumya, for answering all the questions. Guys, we are almost running out of time. So if you have any questions, do share with us on, say, LinkedIn, or share it in the WhatsApp community that we have, and we'll definitely try to reach out to Soumya and get your questions answered. Thank you so much for everyone for joining on a Wednesday evening. Thank you, Soumya, so much for taking the time and answering all the questions.
yes, thanks a lot, Ankit. I think it was a very interesting discussion, and I hope it was useful for the listeners as well. And hopefully, we'll get to catch up soon again.
No, absolutely. Thank you so much. Have a good evening. Good night.
Thank you. Bye.